Hello and welcome everyone to Silver Asset of the Day for the 10th of December 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, we have seen hedge funds and money managers in the last week very slightly increase their net long position with silver. So of those hedge funds that have a position on silver right now, 70% are currently long. Now, it's interesting to note that the gold to silver ratio, that has broken out to 1 year highs. It's hit 81 to 1. What this means is that gold at the moment is going to outperform silver. It's very typical for this time of year as you go through December for gold to be one of the strongest performers versus, for example, silver and also other metals at this time of year, such as copper. Also, you're very likely to continue to get this range-bound price action on the metals, especially as we have a lot of major news items coming up over the next few sessions and into next week as well. First of all, we have Friday's CPI data. That is bound to cause some massive volatility in the markets. Last month of the CPI data, gold prices, they had a 450-point move. So very large volatility off the back of that. Then as we go into next week, on Wednesday, we have the FOMC statement. We also then have the European Central Bank announcement on the Thursday. Not only that, we also have the Bank of England and we have quad witching in the market. So all of this creates that volatility, creates massive opportunities. You would have seen silver prices, they're now down over 3.5% in the last month. We've had now 4 consecutive weeks of downside. Everything that we talked you through for silver to expect the top getting put in the middle of November, that then you would expect that corrective price action after Thanksgiving, after Black Friday, with contract settlement, with the end of month outflows. This is all giving you much better prices now, where we have silver now sub $22 per ounce, whereas just going back to a month ago, silver was trading above $24.50 per ounce. So again, we mentioned at the time, do not FOMO in at those levels. Wait, you're going to get corrective price action later on into November, giving you much better opportunities to capitalize as we go into December. So we're there. We're essentially at much more attractive levels at the moment. You've got support at the moment on silver between 22 down to $21 per ounce. The recent swing lows, they reside from the middle of September around $21.40 per ounce. So much better opportunities, much better prices at these levels. And we're going into some major news items. Firstly, the CPI data on Friday, which can cause those big impulse moves where you can capitalize, of course, off that price action massively. Now, what we've seen over the last couple of sessions as well is more restrictions worldwide and in the UK imposed as a result of the new variant. And with that, that has provided a risk-off environment. The dollar has broken out to the upside, and you've seen many markets that have sold off under pressure as a result of caution in the market, as traders are really waiting and seeing how this plays out. So with this, you are seeing outflows again into the dollar. There are some very clear cycles that you want to be aware of at this time of year that you can really maximize here, finish the year on a high and really hit the ground running into 2022. It's everything that we talked you through previously, that technical analysis does not work. We talked you through that over the month of November, not to FOMO in, not to be utilizing any outdated technical confirmations to end up buying too high, as many traders were getting ultra bullish on the metals because we're about to have a rug pull on the metals, which is what we saw, everything that we talked you through over the month of November, those corrective price action, and now you've got much more favorable prices. So if you just use technical analysis, unfortunately, you will get chopped up a lot and you will get crushed. We don't want that for you. This is where you want to be utilizing a research-driven approach to the market, utilizing data, statistics, market intelligence, understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, learn the intermarket correlations, the ratios in the market, capital flows, extremely important, the overall sentiment of the market, macroeconomics, also extremely important, understanding which major news items will be catalysts for those impulse moves that you can really capitalize on massively. And then, of course, marry that up with key areas of liquidity and how the hedge funds, money managers, banks and institutions are positioned in the market That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.